Hey guys, this is George David with George David Investing. In this video, we're going to be talking about Visa stock and also going over some of the news in the stock market today. All right, let's dive right in. All right, so in this video, we're going to be covering Visa stock analysis, today's stock market news, and also the infamous question, is it time to buy, sell, or wait? So let's dive right in. Now, one of the most important things, as I always talk about, is how much growth potential does a company have? It's more than just being able to grow in revenue. Once a company reaches a larger amount of revenue, they can streamline operations because they have economies of scale and they can expand profits. That's why it's super important to understand not only where a company is in the case of Visa, is currently at $21.5 billion per year in revenue, but also how big the company can get to. Now, to consolidate some of the information, a reasonable number that Visa as a company can grow in max revenue potential, this is about 10, 15 years out, is to a level of $50 billion a year. And that also takes into account some inflationary factors as well. With that in mind, this means that Visa has the potential to grow by 133%. Now, when you take a look at these factors, there's other companies that are better, that have significantly higher opportunities. Just to name two, for example, would be a Tesla, a Dexcom, and here's a third one, a company like Zillow. With those things in mind, the overall grade here, and we haven't even covered the other factors yet, is that Visa is a good growth investment choice, but there are other very strong candidates out there. Now, here's another very important quality to look at. Is the company a mass use stock? Which basically means, would you buy or use the product that they have, or is it something that can appeal to a large amount of people? The reason why that's very important is because it helps mitigate some of the risk. If it's something that not a lot of people use, well, then you have a higher probability of there being constraints in the growth potential. So this just adds an extra layer of security if you're using the product, or you might use a product down the road once the company expands and optimizes. That's a very good sign that the company has a large market share and it could actually live up to some of these maximum revenue potentials. Now, let's go over the stock market as a whole before we make a determination whether it is time to buy, sell, or wait. Now, let's take a look at the news today in the market. The two big things that pop out to me is, number one, there's a vote going on in Congress about raising the corporate tax rate from 28% to 28% from 21%. Now, this is a very valid concern. First of all, because through the history of the United States, over the past 40 plus years, our corporate tax rate has systematically gone down. Now, anytime, and this is very important to be able to understand whether a recession could happen, recessions ultimately come down to consumer spending and business spending. So when a business spends less or a consumer spends less, and it happens drastically, comes out of nowhere, such as an oil price shock or something like this, this can lead to a recession. It also can lead to a stock market dip or crash. Crash is a little bit more of a powerful word, but anything that's going to tank the stock market has to do with spending. So this is actually something that I'm taking a look very carefully at. This is something that could trickle down into businesses. Now, why would this work negatively? Well, first of all, when you raise corporate tax rates, that's someone's business marginal employment benefit. So what I mean by that is that a company that currently has just enough cash to hire or keep certain people might have to think about laying some of those people off with that kind of increase. Now, there is talk in Congress about finding a deal, and this is something that Joe Manchin from West Virginia, the swing vote, in a 50-50 Congress and Senate is trying to backtrack, and Joe Biden's talking about possibly negotiating that rate down to about 25%. Those are all more bullish indications, but a jump from 21 to 28% can really start setting the stage for certain things to happen. So this is something that we got to pay very close attention to, but it's not there yet. The second one is a concerning issue with a credit crunch possibly that's happening with different companies. There's been some hedge fund blowups that have been going on. There needs to be some bailouts. Obviously, I'm not saying that this is reminiscent to 2007 when certain things had happened, but it is definitely worth taking a look at, and that is especially true if the market gets spooked by higher corporate tax rates and that starts percolating into a more volatile market. Now, moving ahead, is it time to buy, sell, or wait? Now, let's take a look at this graph. As I mentioned, always, I personally believe in finding those all-in stocks that have the highest growth potential, that are also mass use products, which also means that either I would personally use it or a lot of people either now or in the future would use the product from the company. With that in mind, I believe in just, having a stress-free experience. It's very hard and very technical to take a look at all of these small little minutia dips and stuff like that and to time them. But what I believe is, doing some back testing, is that it is most optimal to invest in points where specifically the market has technically achieved a dip. Now, this doesn't just happen anytime after a recession. This happens about every 1 or 1.5 years. The market will experience a technical correction where a golden cross would occur, which is when the short-term moving average becomes bullish, which is the 50-day moving average price line goes above the 200-day moving average price line. So as we can see here, this happened in about May 2020 after the financial crash with the coronavirus. But right now, we're not at a golden cross point. We're actually in a period of time where we need to wait. And this is specifically why, and I'm going to continue to emphasize this always to drill this in, because you don't really know when the top is. Now take a look at this. This is an example of the tech bubble in 2000. Had you bought this quote unquote dip that you saw here in about late February 2000, you might have thought that the stocks were going to continue to go up and up and up. And you would have wanted to sell at the death cross point, which is when the moving average of the 50-day, which is the short-term average, goes below the 200-day, which indicates that you're moving into a bear market or that stocks are going down in price. Now, again, if you bought there and you sold there, you would have lost about 20%. And that's why I definitely believe it's very important right now. We've seen some accelerations in stock prices. It's just not the right time to buy because you don't really know for sure exactly when that top's going to happen and when it's time to sell. If you take a look at that graph one more time, if you're in late February, early March 2000, then by the time April 2000 comes around, you're negative, and you're negative for a good amount of time. So again, taking a look at the graph, the good buy was coming around late 1999 when there was a golden cross indicated in the graph. You would have sold at that death cross portion in September of 2000. That's about just over a year's time, made a good amount of money on this, and this is tracking just an index as a whole. I believe that's about 30-40% right there in about a year's time. So no one's complaining there. Don't be greedy. That's super important. Rule 1, don't lose money. Rule 2, don't forget about rule 1. And listen, when you're investing in all-in stocks that not only have great growth potential but are also mass use products, then there's really no reason to try to scrape out an extra percent. Not only is it more stressful, but that's where greed can come in and you can lose money. So don't do that. Invest at the golden cross points. This is what Warren Buffett advocates. Some of the best investors, be patient for that great opportunity and don't get greedy. All right, guys, make sure to smash that like button if you enjoyed this video. It really helps the algorithm and helps this content go out to more people that need to hear about staying patient and finding that rare opportunity. And finally, if you're new to the channel, make sure to hit that subscribe button and turn on notifications. All right, guys, till next time.